Hi dear traders, the previous trading week ended with a speech by the US Fed Chair. Jerome Powell confirmed that the regulator would not raise the key rate higher. He supposes that the current monetary policy stance corresponds to the Fed's goal, thus slackening consumer price growth. The markets showed a positive reaction to the news. In particular, the US stock indices jumped to yearly highs. Analysts think that this year the New Year rally began earlier than usual. Let us find out how the currency and stock markets reacted to the news. The US dollar index was expected to close the previous week with a rise. However, Jerome Powell's speech affected market sentiment. The US dollar index, which measures the greenback against the basket of 6 major currencies, closed the trading week slightly above 103 points, losing 0.15%. The asset also experienced pressure after a slump in US manufacturing PMI. Notably, this fact points to an upcoming recession in the US economy. Curiously, the euro-dollar pair also finished the week in the red. The euro lost its position amid extremely dovish comments provided by ECB President Christine Lagarde amid a sharp decline in the eurozone inflation. According to a recent report, inflation dropped to 2.4% in November, reaching the lowest level in more than 2 years. Markets suppose that the central bank may cut the benchmark rate as early as at the December meeting. Meanwhile, the pound sterling managed to gain in value. On the trading chart, we can clearly see traders' reaction to Powell's words. The quote skyrocketed above 1.2700. However, investors foresee that the Bank of England will cut the key rate only in July 2024. In other words, the Bank of England's key interest rate will be higher compared to the interest rates of other main central banks. Against this backdrop, the pound sterling is becoming attractive for traders who prefer a carry trade strategy. Those who trade the dollar-yen pair are also waiting for monetary policy changes. In Japan, inflation continues to rise, thus forcing the Bank of Japan to take radical measures and raise the benchmark rate. At least traders expect such a decision. However, the central bank's officials insist that monetary policy should remain unchanged. At present, the Bank of Japan explains these actions by economic instability and expectations of the end of the hiking cycle by the Fed. Notably, the key signal to revise its approach is clear signs of a simultaneous rise in consumer prices and salaries. The Fed's policy undoubtedly affects the financial world. Thus, gold prices showed a sharp increase. Once the tightening cycle is over, government bonds may become less attractive and investors will start to put money in gold. Under such conditions, gold surged to $2,070 per troy ounce. In addition, gold is also climbing amid mounting tension in the Middle East. The fact is that Israel decided to resume military action after Hamas refused to free more hostages. Earlier, the situation in the Middle East directly influenced oil prices. Now, oil traders are taking into account only the supply-demand ratio. Last week, OPEC countries managed to come to an agreement and extended oil output cuts. At the same time, a drop in manufacturing activity in the US and China confirms low energy consumption. In this light, oil prices slid to $79 per barrel or even lower. These are the trends of the last trading week. Do not miss our daily news reports to be always in touch with the latest events. See you!